Futures trading is risky and can result in substantial financial loss.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. We are the short-term traders with the long-term view. We got the long-term plan here, and that plan is to trade our trades and trade them every day with discipline and with a rule set, and we keep that rule set and we never deviate from it. And this is going to be a Friday roundup, and the gist of this video will be about emotions and keeping our emotions in check. So I would like for you to keep your emotions in check at all times, and I think after you see a little bit of this video, some of the guys who follow me who are in my forums will understand why I say that. This segment I'd like to call the Three Little Bears, and maybe you'll see why. Let's start with Monday. Monday, 5/21/07, this week, the beginning of the week, the market was sitting around 1903, 1904 in the NASDAQ. That's the June NASDAQ, the ENM7. OMNI came out with the recommendation on Sunday night for Monday morning. That recommendation was, OMNI's calling for a buy in the NASDAQ at 1899. The low happened to be 1903 that day, 4 ticks higher than our buy point. OMNI called for the market to rally up to 1929. The high of the, to 1928. The high of the day was 1927 and a half. I had a note which I put out Sunday evening, and the note stated, as long as the S&P maintains its bullish posture, the NASDAQ has some catching up to do. Well, the markets opened. The S&P did almost nothing. The NASDAQ traded down to 1903 and took off to 1927.25. It's exactly what we were looking for. OMNI's direction was correct. It was a great idea. We missed getting in by 4 ticks. OMNI's right on the money. People are kind of happy with that. Not much going on. The Three Little Bears, day one. Tuesday, 5/22/07. OMNI says go short at 1528.25. And our stops are tightening. And for you guys who follow my videos, you know what that means. Whenever I say, guys, my stops are beginning to tighten here, that tells us that we're about to change direction. On Monday, I'm a bull in the NASDAQ, and I mentioned it on Sunday evening before the fact, and I leave that note, which I alluded to a moment ago, that we should rally nicely in the NASDAQ as long as the S&P stays where it is. That happened. Bull day worked. I turned bearish the next day because my stops get tight, and we put on a short at 1528 and a half. Our original stop was 1536 and a half. At a certain point in the day, in order to protect profits and or protect our equity and our capital, we moved our stop down to 1533 and a half. A little bit later, we moved it down to 1532. The market ran up 1 tick at 1532, stopped us all out, and broke down for new lows of 1525, maybe 1524, and settled at 1525 and a quarter on that day. OMNI was correct. In my forums, guys came out of the woodwork, and they were saying, Oscar, what happened? Your stops got too hit. Your stops are too small. Your stops are too small. What do we do? And I said, guys, sit tight. The stops, there's nothing wrong with the stops. Everybody sit tight. It's only one losing day. So that was the Three Little Bears, day one. Three Little Bears, day two. Wednesday, 5/23/07. OMNI says go short at 1528 and a half. Almost the same trade as the day before. Put your stops in at 1534 and a half. The market rallied to a high of 1535.75. So $1.25 higher than where we'd like to have our stop. It hit that and took us out, made $1 higher, and subsequently turned around and dropped. The market made new lows, and new lows ensued a little bit later, down to 1524. Market settled at 1525 and a half. Day three now, OMNI's direction is right on. It was working perfectly. We got stopped out because my stops are getting tighter. For a guy like me, I keep my discipline. I see my plan is working, so I got stopped out. But the OMNI's calling the market correctly. I stick to my guns. Stick to your guns, show no emotions, and good thing you guys can count on Oscar because it's exactly what I did. A little more proof in the pudding. The stops, the emails I started to receive and the forums on Three Little Bears Day 2, what I received in the forums, the posts were, Oscar, your stops are too big, your stops are too small, your stops are going to get us knocked out. Maybe you should change direction. I started reading things that, one of the posts were that, oh, it must be the Vegas effect. He's been ruined. He'll never be able to trade again. And then I got a guy who pops in the forums and goes, Oscar, I don't like the way you trade because you're an overtrader. And I said, listen to the show of emotions coming out of guys. Hey, an overtrader, that's the funniest thing I've ever heard. I trade once a day, guys. One trade less a day, and I'm a non-trader. And an overtrader, by the way, for the guys out there that don't know what that means, that is a trader who has an account of X amount of dollars and trades way too large his positions each day, or it's a guy that just jumps in and out entirely too often. Both cases makes you an overtrader. I am so far from an overtrader. Dude, take a look at your jargon, take a look at the definitions behind them, and figure out exactly what you're trying to say when you jump into a forum and say something like that. 'Cause it's a bit misleading, maybe to yourself, because if one lot a day or one trade a day is overtrading, I don't know how else to do this. So I thought I would just make a point to you, and I'm surely glad to help you with that. And if there is some terminology that you need some help with, feel free to write to me. I am here to help. I am not here to ridicule. This is not about ridiculing anybody, guys. I have what I like to call an academy. And you guys, I will take you as far as I can with my lessons, and I will help you in any way I can, but you got to keep your emotions at bay. You know, you guys had me laughing this week. I shouldn't say I've never seen. Hey, I've come up through the ranks myself, and emotions are the hardest thing. It's the hardest things in the world to keep out of your trading. And I understand that, and I sympathize with you guys. But let's continue with the lesson for the week, and you'll see why you have to keep your emotions at bay when it comes to trading. So we had day one. OMNI calls it to the T, but we missed getting in by a couple of ticks. Then OMNI reverses from bullish to bearish. I talk about stops being tight because that's what my work says to do. It's got nothing to do with appeasing the crowd or maybe I was wrong. Nothing at all. It's a trading rule. It's a mentality I follow. It's one of my rule sets, and that's the way it works. When the market says tighten stops, when the analysis says tighten stops, I tighten stops. So we had a tight stop. We moved it 3 times, and one tick higher on Tuesday knocked us out, and then we broke. So the OMNI direction was right Monday and Tuesday. OMNI direction was absolutely right on Wednesday. It rallied up. We had a tight stop again, and it knocked us out. The market did crack, and I was steadfast, and I didn't change my thought process at all. I did not rethink my analysis. I didn't think about my sick grandmother in the hospital or my dog that was hit by a car 2 years ago. None of these things made me change my mind, and especially you guys that were getting nervous in the forums, asking me to change my stops and reevaluate my technical analysis. Guys, you make me laugh. Keep the emotions at bay, dudes. I promise you, you'll have a better life at trading if you don't try to find justification behind every trade, especially if you're calling market direction correctly. If your stop was a little tight that day, don't let that change the way you've looked at the market, because your scope is obviously correct at this point in time. We are short-term traders. We're bullish Monday, we're bearish Tuesday, we're bullish Wednesday. It doesn't matter to us because we're short-term. But you can't change your bullish or bearish posture just because you lost on one trade. So here we go. Let's continue the week. Thursday, OMNI says let's get short at 1526.5. But I came out Wednesday night in a video and said now Thursday is going to be a day where there will be a lot less traders because traders are going to leave for the 3-day weekend, make it a 4-day weekend. Volatility will be such that you will not be able to stop the market in certain areas. So today we'll need wide stops, and I expect the market to break. I also came out and showed you guys a chart, and I stated, listen, we have an outside reversal day down coming. That I expect. I never expected the outside reversal day down because that creates itself. When it does, you notice it. But I did expect this market to crack on Tuesday and Wednesday and on Thursday, and I stuck to my guns and I stuck to my plan. So I got stopped out, a small loss, got stopped out again for a little bit larger loss, but both of them were relatively small because we're using small stops at this point in time. So far, so good. OMNI's right. I'm steadfast. Let's see what happens next. On Thursday, we sell at 1526.5. Our stop is 1534.5. Market rallies to 1532.5, turns around and cracks all the way down. Original trade of the day. And go take a look at the OMNIs for Thursday, and you'll see that this was posted Wednesday evening before the event, as we always do. We got our show running well here. Original trade is to sell at 15.26 and a half, buy them back at 15.16. I stuck to my guns. I got everybody short with me at 15.26 and a half. We moved our stops to break even as soon as we could. We bought them back at 15.16, exactly what we had in our OMNI trade recommendation for the night before leading into Thursday. More proof that I stuck to my guns, and you need to as well. No emotions, total discipline, stick to your guns, do not second guess what you're doing. If your scope is right and you're calling direction correctly, but you've been stopped out, does not matter. Maybe your stop was in the wrong spot, but you've called direction, stick to your guns. Okay, let's continue. On Thursday, Omni says sell short the NASDAQ at 1917. As we're rallying up, the S&P hits my short at 26 and a half. I go to the market at 1909 and a half. I get filled at 1910. Some guys write to me immediately and say it blasted off so quickly we actually got filled at 1916 and 17. Our work said sell them at 1917. The high of the day, 1917 and a half. Our work says buy them back at 1897 and a half. The original trade is sell at 1917, buy them back at 1894 and a half. We sold at 1909 and a half, 1910 and 1916 and 1917. I didn't get the 16 and 17s off. Some of my followers did. Guys, great trade. We bought them back at 1897 and a half. Our buyback should have been 1894 and a half. We stuck to our guns. We rode out through this week that I call the Three Little Bears because, again, your stops are too small, your stops are too large. Hey, Oscar, your stops were just right. Is what I was getting from you guys in the forums. You can't live and die with every trade. It's no good for you. You have to, again, I will say it over and over, discipline, 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 and please keep your emotions at bay. So again, I put this video out just to let you guys realize, again, emotions, stay away from what we do. If my direction is right on Monday, my direction is right on Tuesday, my direction is right on Wednesday, and my direction is right on Thursday, there's never a moment in my thought process or in my analysis that ever made me question what I was doing here. And to be honest, had I started appeasing some of your posts in the forum, you know, I would have changed my strategy. I would have shown non-professionalism, and we would have never caught Thursday's trade, which incidentally made more money than we gave up on those two little stops. In NASDAQ and S&P, we caught him clean, exactly what we were looking for. Again, I stuck to my guns. I showed no emotion. I want you guys to follow me because you know what? This happened before your eyes. This materialized throughout the week. And please go back into my forums and take a look at some of the posts if you guys think I'm exaggerating. And you can see the show of emotion that had come out from traders. Maybe you're used to winning with me. Maybe you're used to the calls not getting you stopped out. Losing is an integral part of trading. No one can get away from it. How you handle the loss separates what we like to say the men from the boys. No insult intended to any women out there, but you know the old saying. It separates the men from the boys. You need to steadfast like this, and you don't move when these markets start tattering you. And I wrote that in my forums, and I said if we get our cages rattled, the little guys, just sit tight and keep throwing those punches, and you'll see what happens. Bam, there it is, proof in the pudding. Do not get emotional, ladies and gentlemen. That's all this video was about. I'm going to say it 10 times. Emotions, 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 emotions. Keep them out. They will not do you any good. That was a total display of emotion from the novices. I did not flinch, guys. I want you to learn from that. I welcome your posts in the forum. I understand your apprehension sometimes. But sit back and look at this over the course of a year's trading time. As I said, we are the short-term traders with the long-term plan. And if you stick to your guns and do not let a couple of losses make you change your ideas about how you do analysis and where the market's going, we should all end up doing well together. So in any event, that's what happened for the week. Again, this is to help. This is not to belittle by any means whatsoever. I think you traders out there are fantastic. I think you are as brave as anyone I've ever seen that you follow my recommendations to begin with. I think you guys are just doing great, and the more I can help, the better I feel about it, the better our crowd does, the more our academy becomes a real trading academy. And I love being at that site, and I really love helping you guys. So give me a call, 718-351-2266. Anything at all you guys would like to talk about, I am here at all times. If you'd like, go to my site, livewithoscar.com. Is there another one that we think would be good to give out in the video here, Bob?
I think that's it. The livewithoscar.com is the best one to go to.
Livewithoscar.com gets you to everything. And if you go to that spot, you will get to see what we do. You will get to see what we post in the forums. You'll get to see past Omnis or archived Omnis, so you can see what we did. Please compare them to the flash updates. You can see where we got in and where we ended up getting out. To get on our flash updates database, which is our way of updating you to our trades. In other words, if I give out a trade recommendation early in the day or the night before, once you're in the trade, I will send flash updates periodically directly to the site and email to everyone and include you on your cell phones where we're going with the orders, how we're going to change them, where we're going to take profit, if we're going to cancel our stops, things of that nature. They all come out on what we like to call flash updates. If you'd like to get on the flash updates, simply go to www.livewithoscar.com and fill out a free registration form, and I'll help you out there. Okay, ladies and gentlemen, again, this is a lesson in discipline. This is something I like to say before. I tell you to say this every morning when you wake up. Say it every evening before you go to bed, and especially say it every time you're going to place a trade. And you know what that is? Stops are in, emotions are out. Yeah.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.